trading at its best.
Okay, welcome everybody to the Forex 101 today. We're going to kind of change things up. As you can tell, Nate's not with us today, so I'm going to be doing these webinars. We're going to be doing things a little different going forward. Nate's done a lot of training on getting you guys up to speed on things, and so what we're going to do is today I'm still going to do what he talked about, maybe in a less formal format, mostly just going to be kind of showing you what I've learned about brokers over the years, and that you're interested in learning about. You can also type those in the chat at any time, and we'll also talk more about that towards the end. And is everybody hearing me okay? If you can type in a yes in the chat. Sounds like maybe it was going in and out there for just a second, but let me know if we have any trouble with the mic so I'm not talking to myself. Okay, everything's good. Okay, so let's do this. Let me bring up a web page. So give me just 1 second here and we'll okay. Now there's a bunch of different websites you could use, but I'm going to show you one that can give you a lot of the information you need in one place. So I'll move this over here. Okay, so this is one website that will show you a lot of these different brokerages that are out there and give you most of the information you would need to know about them. So you can see that they've got a account type column here telling you what different account types they offer, the minimum deposit, your minimum lot size. You can see InstaForex. Some of you guys might trade with them. I haven't checked them out myself, but you can see they've got where you can trade down to a very small amount. That's why you can trade $1. They're really breaking the lot size up so you can get started in, with a really small amount, or just have the ability to scale in on and scale in and out of trades on really small accounts. Shows you your typical spread, shows you your, and this is for each account type, they've got it broken down, and then your commission on the trade if they charge any. So there's a couple other things here. You've got your max leverage, what platforms they offer, how long they've been in business, and what regulation agency is covered governs them. Okay, so you can skim through here. You can see a lot of different brokerages. Now, the brokerage that we trade with is, we trade with FinFX, and a lot of our beta testers and members have had good success with Pepperstone. So here's what I'm going to do. I'm going to post some links here for you guys, and we'll go ahead and talk about those brokerages. But if you have some others, or you want to look at some, a site like this that kind of shows you your different options, you can do that as well. But I'm going to post a link in the chat, and you guys can just follow me over here. Oops, sorry about that. Don't click that link. Let me give you one more. It didn't grab the end of it on there. Okay. So go ahead and click that second link, TradeWestForex.com/FinFX. That'll redirect you directly to the page where the accounts are at. So if I go ahead and click that link as well, you'll see that it'll take us over to their the page where their trading accounts are at, and they kind of break down the same type of thing here, but they give even a little bit more information about margin calls, type of orders that they do. So you can always get a demo started. If you trade with our software, you'll see that all of our programs come with a built-in FinFX account that it will install with the program. But if you don't have a demo, you can get one here. But let me explain to you the different account types and kind of what we've tried. We've tested all of these different accounts out. The micro, it seems to be the best option for most traders, and the reason why is because of this minimum lot size. You can trade down to 0.01 lots in 0.01 lot increments. So that gives you a lot of flexibility with being able to scale in and out of trades. You know, the example is if you've got, let's say you only have $500 in an account. If your broker's minimum lot size is 0.1, which is one mini lot, then that's pretty aggressive on a $500 account to where you really don't have a lot of room for scaling into a trade. Because basically, if you took one mini lot on $500 and then wanted to scale in another mini lot and another mini lot, you're going to eventually run out of margin and just not have a lot of room for the market to move. So let me go ahead and explain some of these terms as well, because some of you might not be familiar with, you know, margin, leverage. I don't know how, I had to go look back and see if Nate's covered all of that. But with the brokerage, if you're a U.S. citizen, all the U.S. brokerages, and you know, they're going to make you go with 1 to 50, you know, or 50 to 1, and that's even, you know, a bigger problem for people with small, you know, with traders with small accounts that don't have a very, you know, with their minimum trade size that's not small enough. It's, you know, mini lot minimum. So, so the reason we went with FinFX is because they still accept U.S. accounts and offer 200 to 1 leverage, and you can even request up to 300 to 1. So, with leverage now, some of you might not even need that much leverage. You might do fine with 1 to 50 or 50 to 1. It's a matter of giving you the ability to take more positions at once, being able to swing trade better, because swing trades are going to need more room for market movement, and you're going to end up needing to trade a smaller lot size. So, you know, that's where your minimum trade size is going to kick in. So anyways, like I say, this micro account is going to probably be what most of you will go with. If you've got you know, $20,000–$30,000 to trade, then you know, you might want to go with the ECN. But it really comes down to how many trades you plan on having open and what type of trading you're doing, day trading or swing trading. Okay, so and the other thing you'll see here is that margin call stop out level. Is everybody familiar with what a margin call is, or the stop out level? You guys can just type in the chat. Is everybody familiar with how that works? I'm looking at it. This is the 101 webinar, so I'm sure most of you, okay, there's a couple of you saying you don't know. That's what I kind of figured. So let me go ahead and explain what this is. I'm going to bring up a MetaTrader platform and give you an example here. So give me just 1 second here. I'm just going to open up a quick demo so we can show you how this works. Okay. So I just opened up a little $1,000 demo just to show you guys how it would work. Makes it real easy to see a real example with a trade. And the markets are still open for a bit longer, so we can do that. Okay, so now you guys should see a MetaTrader chart. This is FinFX. Another thing about them, of course, is why we went with them is a really tight spread. Look at the spread on the euro dollar right now, 0.6 of a pip. Very tight spreads. And when we trade EAs or, you know, day trade and scalp trade, spread's a big deal. Okay, so let's go ahead. I'm just gonna, doesn't really matter what chart we're on or anything here, but I just want to show you, when you look down here in your trade tab, you'll see you'll have your balance you have your equity, and then you have your free margin. Okay? So depending on your broker's leverage and the volume that you trade, it's going to use a certain amount of your margin. So this account should be set at 200 to 1, since that's what I selected on when I opened the demo, but we'll be able to tell here in a second. So what I'll do, I'm going to make it easy and actually trade. I'm going to trade the US CAD. The reason I'm doing that is because the pair starts with dollars. That will mean that a mini lot is $10,000 in currency, and it makes it easier to calculate and look at the margin. Then I'll maybe get a little more complicated and show you another pair. But let's start with the US CAD. So if I go in here and trade a mini lot, I have $1,000. I'm just going to hit buy. It doesn't really matter to test this. You'll see that it says I've used $50 in margin right here. So a couple more fields come up. You'll see margin, free margin, and margin level. That's what we're talking about here, was that margin call level. I'm going to explain how this all works. Okay, so what you have is when you take a trade, it takes up so much of your margin. So it took up $50. And I traded one mini lot, and you're probably trying to figure out why is it $50? Well, it's because I have 200 to 1 leverage. What that means is the market provider, the broker, is going to put up $200 for every dollar I put up. Okay, so I've put up $50. They're putting up 200 times that amount for my position size to own that much currency. So if I have $50 times 200, that's $10,000 in currency, right? Well, since I traded 0.1, that's why it's $10,000. One mini lot on the US CAD is $10,000. Now, like I say, for me, to control $10,000 in currency, I only had to put up $50 of my margin. Okay, so now it doesn't end there. That's just your initial margin to open the trade. Now what the broker has to do to protect themselves from traders, that use up all of their margin. Let me just do this real quick here. You can see my margin level and my free margin. There's plenty of room. Well, let's just do this. Let's keep it the way we have it, and then I'll add some more lots and explain how that works. So let's look at the free margin now. So the free margin is simply my equity minus my margin. And so what that's telling me is how much room I have before the broker is going to have to cut their risk, and cut my position in what would be called a margin call. And they will do that at that level that they specified on this website. They will do a call at 150. And what a margin call means is they will turn that line, that trade line, yellow. So this thing, instead of being blue when you select it, or white, it will change to a yellow color, basically notifying you that you're close to being margin called and that you're on watch. And then the 100% stop out percentage, it means they will close your position out on you at 100, or when it reaches 100%. So that's what this margin call level is. Right now I'm at 2,000%. I've got plenty of room, so I'm not going to have any problems. So the way they calculate that margin level, for those of you who want to know, is they take that 951.63 in free margin and divide it by 50. And then they times that by 100%. So it was 1903 just a minute ago, now it's 2002. Okay, so that's how you determine the margin call level. So let's go. Okay, so I think I might have told you free margin divided by 50. It's actually your equity divided by 50. So your equity, as it approaches 50, is becoming closer and closer to 100%, right? As soon as your equity is equal to $50, then you would be margin called, because that's 100%, 50 divided by 50. Okay? Hopefully I'm not losing you guys. This is probably a little more advanced stuff, but it's really not extremely important to understand that how it's calculated. For you guys, it'll be more about just making sure your margin level isn't approaching 100% and that you don't go add another trade when you're that close. So let me go ahead and show you now. This is obviously I have plenty of room, but let me show you how you would calculate how many pips room I have on this trade. And this is something you might want to learn. If you guys are confused or you want me to give you more examples, definitely type in the chat. Of course, these are always recorded and you can review them, but I want to make sure we give enough examples for this to make sense, because this is something that a lot of traders don't understand, and they get themselves into a few trades and then they get stopped out and they don't know why. You know, even if it was a small amount, sometimes you can get a margin call because you had a bunch of trades open and it's just for, you know, a couple % loss. It's not like you have to have a margin call where you're losing most of your account. That's not always the case. So in this trade, it would be losing most of the account, obviously, because at $50 margin, I've got a lot of room. But let's go ahead and show you how that works. So basically, I have to lose $950, right? My balance is $1,000. My margin I've used is 50. So that's $950. Now, to determine how many pips that means, I just have to look at my position size and what that is equal to per pip. And you guys have, hopefully you remember the lesson I think Nate taught on how to calculate the pip value. On the US CAD, since the cross pair is CAD, the currency base is not, or the currency value is not determined in dollars. I have to convert it. So let me just get another calculator up here. I have to convert this into dollars. So the way you do it on US CAD, since the US is first, I just need to get the inverse so that it's based in dollars. So what I do is I will take 1 divided by 1.02796. The pip value per mini lot is 97 cents. So now that I have that, I'm trading just one mini lot, so it's going to be 97 cents. I will then take $950 divided by 0.97. I could even round it 9728, but I can have the market move against me 976 pips before I'll be margin called. So I'm definitely going to give you guys more examples, but that's kind of the way of doing it. You know, you don't have to do this every time you take a trade. That's not really the idea. You just have to get a feel for what, you know, how much room you have on a mini lot when you take a trade. For example, on this account, I now know that if I'm going to go swing trade, I probably don't want to have more than about 3 mini lots open, because if you divide that out by 3, that's 325 pips of room. And if my stop loss needs to be 350, I'm going to get margin called. The broker's going to close my trade at 325 pips just before my stop, and you don't want that. You want to give yourself enough buffer room that your stop is the thing that takes you out, not the broker. Okay, so this margin level, when you go looking for brokerages, can be a pretty important thing, just as much as the leverage. And let's give a few more examples before we move on from this. So let me show you. Let's close that trade out. Let's show you another currency pair. Let's do the euro dollar, what you guys are probably, a lot of you guys are trading. Euro dollar, this one now starts with euro instead of dollar. And that means the margin cost is going to be different. What it's going to be is it's going to be for every mini lot, you're going to times 10,000 times the currency rate. So if we go 10,000 for a mini lot is the base, we times that by 1.28326. We've got 12,832 in margin is what it will cost us on a euro dollar with one mini lot. Now, how do I determine my cost in dollars on my account? We're going to kind of do it reverse this time. The way you do that is you divide it by your leverage. I have 200 to 1 leverage, so I'll divide it by 200. That means the broker is going to require me to put up $64.16. So let's try it. There you go, $64.17. They rounded it. So $64.17 is what the broker required me to put up for margin. So again, I've got plenty of room. If we did the math now on this one, let's go ahead and do that. Let's see how many pips room I have before a margin call. So I'll take my balance minus my margin. So I have $1,000.47 minus 64.17. I have $936 of room before I would get a margin call. So now I need to divide that by the pip value. Well, since this one is already based in dollars for the pip values, it's going to be $1. Not going to be 96 cents like it was for US CAD. It's going to be just a full dollar. Any currency pair that ends in dollar, this might be a review from one of the previous 101 sessions, but any currency pair that ends in dollar is going to be $1 per mini lot. If it ends in another currency, you have to go look at the currency value. You know, if it's euro pound, you look at pound dollar, and that means it's $1.51 per mini lot. If it's US CAD, like we already did, you have to get the inverse. You have to have it all based in dollar. So you would take 1 divided by 1.02. Okay, USCN, you have to do 1 divided by 103 and then times it by 100 because there's only 3 digits instead of 5. Anyways, you guys can probably review that. I'm pretty sure Nate gave you that. It was already taught on that. Anyway, so let's look at this now. So if it's $1 per pip, it's very simple. That means it's $936 or 936 pips before I'd be margin called. Okay, you're probably thinking, so that's plenty of room. I don't have any problem. But what if you're scaling in now? What if that was just I'm going to scale in 4 times? Well, or maybe what if I want to have 4 or 5 different pairs that I'm trading all at once? Let's take a few trades here and look at this. So maybe I scale in on this trade. I add another mini lot. Maybe I look over at the U.S. franc and I sell a mini lot here, and then maybe I scale in another mini lot. Do you see how quickly my margin's getting eaten up now? Doing the same math that we did there, we could go back and do this, but it's already calculated for us. I just wanted you guys to see kind of how it works. But it's already calculated for us, and it says I've used $228 in margin. And so now what we could do is we could take our balance minus our margin. That's how many dollars we have. And we could look at all these positions and know that if they were to all go against us, we have a lot less than 900 pips now. It might only be 200 pips. And if we added a few more, or maybe even a larger lot size, let's say I go 0.3. Okay. You can see with 200 to 1, you have a lot more room. At this point, I would already be margin called at 50 to 1 because I'd have to put up 4 times the amount of margin. I'd already be using. I probably wouldn't even have been able to get filled on that last trade. And I'll show you. Let me show you how that would work even on a 200 to 1. So if I have another $713 in margin left. Let's do this. I know that it's $50 a mini, so I should be able to take 1.4 lots on a dollar pair. Let's just go 1.3. And there you go. Look at that. I'm really close to 100% now. You'll see I'm in margin call. It's not yellow. I guess it was pink. Okay, so it changed pink down here. And that means it's in margin call territory. They're watching the account. The second it hits 100%, they are going to close the trades, or at least some of the trades, and to bring my margin call level back up. So now I've only got $26, $25 of free margin. So if these trades move around much, I'm going to end up getting margin called. So I'll leave this open for a minute. We'll see if that can happen. But does anybody have any questions? I'm kind of cruising through this because this is not what we was planning on talking about today, is all the detail of how to calculate margins. But my main purpose was to show you how the margin call level works with your brokerages, so that you can have an idea when you go to open brokerage accounts. That's something you want to look for. There are actually some brokerages that have a margin call level down at 80%. I've even seen it down as low as 10. Usually they don't do that for very big accounts because that puts that broker at a lot of risk. But that's something that can give you a lot of leverage. It basically is adding more leverage if you think about it. Hal here is saying margin calls and stop outs vary widely between brokers. Yeah, that's what I'm saying. Yeah, you've got some out there that do it depending on your balance. If you've got 100 grand with them, they're not going to give you that kind of room. They might do 150%. So that's something you'll want to check on. Yeah, and that's something else Hal just brought up here, is a call usually means no more trades can be opened, and you can't close trades. When stop out, it means that they will close trades. So yeah, that's the other thing. Once you get to that point, margin call, you'll see that I don't have enough margin anyway, but if I did, I'm not going to have enough room to even open another trade to try to maybe offset a position, and that's something else that'll happen when you're in margin call territory. Hal's saying at the broker traders way, they do 100% margin call, but a 20% stop out. So that gives you a lot of room. You have to be trading either pretty aggressive or a lot of positions you're trying to manage to really need that much room. So most of you are probably not going to have to go out and try to find a brokerage that has those kind of conditions. For me, I do fine with just the 100%, the standard margin call at 150, margin stop out at 100. Okay, so I think you guys get the idea of here. Just making sure that this is the other side of it here, is just making sure that when you fund an account, and you look at your minimum lot size, because you can see I didn't have that many trades here, but it quickly can eat up your margin. Now at 200 to 1, I guess I did have quite a bit of room, I guess, with that large lot size I took at the end. But you just have to look at your trading plan, look at what you've been doing. The best thing to do really is to open a demo with who you plan to live trade with and see if it can handle your trading conditions. And maybe you have to use some of this math to kind of get an idea of just the pip value and your total positions and see how much room you really have, because that's the worst thing that can happen is that you get into a good trade and you get a margin call from some other trade that's just barely down because you didn't have a lot of room. Like, think about these trades right now. I might have a good trade that's taken off making me money, but another one that's going against me and causing my margin to go down, and I could get stopped out and closed out on that trade before it becomes a really good profitable trade. So anyways, something that I thought would be a good example to show you guys so that you know that you want to try to find your brokerage account that allows you to trade, if you've got a small account, allows you to trade a very small lot size and gives you enough margin and margin call room to trade with. Okay, so if we go back to FinFX, for example, they definitely offer that here with a micro account. You can fund an account with as little as $100, and you can see the spreads are variable starting from about 1.6 pips, and we've been seeing that in live trading, very tight, very good spreads. And then you've got your minimum trade size at 0.01. And so what we were just testing was based on 0.1. So 0.01 even gives you more room. You'd be 10 times more room here. That's why you could trade down to $100 probably without any trouble. Okay, so then for those of you that have more money and you're not so worried about needing to trade really small sizes or your margins, that's when you might want to jump up to the ECN. Now what they do there is it'll be a raw variable spread starting from 0 pips. And like I was just showing you guys on the euro dollar, that spread is extremely small, 0.6 of a pip. So 0.6 of a spread, very small spread. And it can be down as low as 0. And what they do, though, to make money, of course, is they charge a commission. $7 per standard lot traded. Okay? Round turn. What that means is the whole trade. They'll charge $3.50 in, $3.50 out. So it's $7 per standard lot. And so those of you that trade with that size of an account, you can start with even just $1,000, but that's where you've got that mini lot minimum in this account. There's no micro lots. You can step by micro. You can go 0.11, 0.12, 0.13, but you cannot do 0.01, 0.09, 0.05. You can't do that small of a starting lot size. Okay. So now the other thing I want to point out about brokerages is their order type. When it says market order, there's actually, this is one thing you can use to find out if a brokerage has got a dealing desk is they can either have market execution. Let's see if I can show you this. When you go to take the trade, they either have market execution, and it says right here, by market execution, the price will be quoted by dealer. So this is just on this demo account. That's the way they quote the price here and execute the trades. Then they also have market I'm trying to remember what the other one. Let me go bring up another account. Give me just 1 second here. Okay, give me 1 more second. I'm just bringing up an account that we can see with the different type of execution. Just going to remote into my VPS server. Yeah, most of my trading I do have on a VPS myself. We offer VPS service, and we definitely use it ourselves as well. You'll see I have a whole bunch of platforms. You can see down here I've got a whole ton of platforms running, and there's 100% uptime for the most part. We really haven't had any downtime. But anyways, so let's see what Pepperstone has here on this account. Okay, that's market execution. Let me look at a few more here. Okay, here you go. Here's another one. Okay, instant execution. That's the other market type. Instant execution means that it's automatic. The price you see is the price you get unless you've got latency. That's basically how long it takes for your order instruction to get to the broker. So you still can get requotes or slippage, but it's less likely when it's instant execution. Okay, so those are the two different things. Another little thing you might want to look out for on brokerages, and let me go back to that page. Okay, so let's see if there was anything else on here I wanted to show you guys. They've got the Pro account where they dropped their commissions down a little bit, down to $6, and this account, this is a starting, you have to have a minimum of $10,000, so they lower their commissions a little bit, so it can start to add up. You'll also notice, though, on the ECN accounts, both of these, your maximum leverage is 100 to 1. That's another reason you probably want to start off on a micro, and even a lot of traders will just stay on a micro, even if you have a large account. And that's actually what I've been doing. Unless I've got a robot that I've got trading that I want really tight spreads on a certain pair, I might find that the ECN offers me a better spread. Okay. You'll see they also have some benefits here they talk about with FinFX. There's no first in, first out rules. You can hedge. Hedging is allowed. You can even fund your account in different currencies. Something else you guys might want to try to do is some of you, I know you've asked about funding in euros or pounds. You can see you can fund in euros, pounds, dollars, and francs with FinFX. And the other nice thing is you can fund an account in many different ways. Bank wire, credit card, and debit card. That's what I really like. It's just really simple. Use your credit card, debit card, and it comes right out of your account. Then you can use Skrill. That's MoneyBooker's, a little more secure, so you're not giving your information directly to FinFX. But these guys are AAA Creditworthy up here. They just, they've been around for quite a while, and they do have regulations, governing regulation, so you don't have to. It's not like some brokerages. I've traded with a few in the past, not many, but I've traded with a few that are really crooked. and you have a hard time getting your money back from them, but I've had none of that trouble with these guys. As you can see here, they say there's no conflict of interest with their clients, which basically is they don't trade against you. They're making money in the ECN from the commission. They don't make anything from the spread. They're giving you the raw spread. Now on the micro, they're making money from the spread. They'll mark it up a little bit, but they don't charge commission on those accounts. So it's kind of really the same thing, but let's see what else they've got here. Scalping. Some brokerages don't like scalping. I've traded with some brokers in the past that turned me away because they didn't like my, they didn't like me getting in and out of the market so quickly because they didn't have the best liquidity provider set up for that. It was actually costing them money. But these guys don't have that problem. And the other thing is there's actually some brokerages that won't even fill your orders fast enough. This is something you want to watch out for. When you're trading a demo, don't expect everything to carry over exactly the same. There are some brokerages where it's very, very similar as demo. But there's also others that that you trade with on a demo and you go live and it takes 20 or 30 seconds to get filled, and that's crazy. I can't remember the brokerage. I think that might have been 1 pip spread. I think there's a brokerage called like 1 pip spread, and that's how they did it. They could show you a 1 pip spread, but it took 20 or 30 seconds to get filled, and really you didn't get 1 pip because of the slippage. What works out best, paying them spread or paying commission? That really depends on the times of the day that you're trading and the frequency that you're trading. If you're trading during the Asian trading session, the slower times of the day, where the spreads are going to be wider, that's the micro account and the ECN might be very close. You actually might be paying more on the ECN because the spreads are going to be wider anyway, and you're going to pay a commission. Where the micro spreads aren't going to change much at that point and could be just as competitive as the ECN. But if you're doing trading, a lot of day trading, most of the time you probably would go with an ECN. I just know for me, the differences are not that big, at least between FinFX. For me, I haven't seen enough need to go to an ECN. I'm still pretty much stuck with the micro. But something you could possibly do to see if with your particular situation is fund both accounts. Do the $1,000 in the ECN and either the 100 or 1,000 in micro. Trade both of them, and soon we'll have our trading platform out where you can just trade them both with one click, and then that wouldn't be too difficult. But even without that, it shouldn't be too hard to set up Pipstat and just hit buy or sell simultaneously for both accounts. And Kenny's, with his experience, he's also saying it depends on your trading style, but he's saying for scalping, the commission, the ECN account has been best if you're doing scalping trading. Okay, so we've talked a lot about FinFX. It's just that's the one I really trade with the most. You guys can click that link in the chat if you want to have that page up. You can look into it more later. Let's go to the other one here, FinFX, or not FinFX, sorry, Pepperstone. Stuck on FinFX, aren't I? Okay, Pepperstone, let me give you a link to that one. A lot of our members, like I say, use these guys and have had pretty good success with them. Okay, I'll go ahead and click that link in the chat. You guys can follow over if you'd like. So it says TradeWestForex.com/Pepperstone. That redirects you right to where you'll see it says open a live account now. You can either click that or you can go up here to trading accounts and just click trading account types. And here they'll break it down for you, just like FinFX does. They got a standard account or a razor account. And You can even see their live raw spreads here. So if you wanted to, before you open an account or even a demo, you can click here and get an idea of what their spreads look like. And you can see they're pretty competitive, right along with FinFX. We're seeing 5 or 6 tenths of a pip on the euro. Let's go back to trading account types. You'll see they say institutional grade STP spreads. Does anybody know what STP means? Or what that stands for? It stands for straight through processing. And so what straight through processing means is they, it's just like we were showing you earlier with instant execution. They don't have a dealing desk. It's plugged directly to the provider, straight through processing to the liquidity provider. And that gives you the best chances of actually realizing those spreads, not just seeing some quote, but actually when you go to take your trade, getting filled with that spread. And while we're talking about that, execution spread is what we call that. Let me show you Pipstat. We have this little box that when you start taking some trades, if you hover over it here, it says average execution spread. The first number is at trade open. The second number is at trade close. So you can see when I've been opening my trade, I've been seeing an average of 1.7 pip spread. And when I close the trade, I've been seeing an average of 1.1 pips. And this is based on some trades I've just been taking in the slower times, Asian market, so the spreads are a little wider. But anyways, that's something you want to watch too. When you do open an account with a broker, compare this average execution spread with different brokerages you're trading with. Because it doesn't matter what they tell you here or what you see right here. If I see 0.6, 0.8 for my spread, that doesn't really matter. It matters what am I really getting filled on. How fast are they filling my orders and what price am I really getting filled at? And Pipstat has some built-in technology here to keep track of that for you and tell you what you're averaging. So anyways, if we go back here on their page, that's what STP stands for. Now this other one here, this raw ECN spreads from 0.1, does anybody, we've been talking about ECN a little bit. Does everybody know what ECN stands for? ECN stands for Electronic Communication Network. And what that means is it's a network of liquidity providers that pool together and offer the market, the spread. And so you're seeing the raw, they're saying the actual real ECN spreads, and those can be down as low as 0.1 pips. And so on each one of these, this STP is more like the FinFX Micro, where they don't charge a commission, but you get a really good straight-through processing spread. And this one over here is saying we're giving you the raw actual market spread, but to make money, we're going to charge you $3.50 commission per 100K trade. So I'm pretty sure that should mean the same as FinFX, $7 round turn. Kenny was saying that would be good to have in the new platform too. Can't remember what we'd be referring to there. Maybe something that tells you the type of account, maybe. Have to maybe let know what part you meant on that. I'll make a note about it. Okay, they give you a few more details. They're saying edge technology, smarter, faster, tighter spreads. Oh, Kenny's saying to add the average execution spreads right into the trading platform. Yeah, that's definitely a good idea. So you can see it on the fly for any brokerage you're trading with. So they're just saying both of them use that edge technology. It's probably something to do with their bridge that they've created from MetaTrader to their providers. They use some technology that they've coined, and that gives you really fast execution. I think that's been one of the pluses we've heard about from Pepperstone is just really fast trading abilities. Of course, they got the one-click trading. Most MT4 MetaTrader brokerages have upgraded now to include that one-click trading. But most of you are probably going to want to use Pipstat that has more than just one click built in. It's got your stop loss and take profit automatic calculations to determine the ideal stops and targets, and also automatically calculating your lot size for you. And of course, there's lots of other little things built in. They say they got 52 currency pairs, and you can fund your account in either one of these with $200 minimum. You can trade from 0.01 lots, so down to a micro lot for either one of those. Your leverage is up to 400 to 1. Now that's probably not going to be 400 to 1 for U.S.-based accounts. I'm not even sure. I don't think you can open an account here. This is more for non-U.S. citizens. Maybe one of you can make sure I'm saying that right, because I'm pretty sure that this is for non-U.S. customers. I think FinFX was, yeah, Kenny's saying non-U.S. So if you're a U.S. citizen, you'll have to probably go with FinFX. Okay, designed for advanced EA and EA traders. They're saying is what the Razor account's for. Most traders, they're saying go with the standard Edge account. All trading styles allowed. So anyways, there's that. That's all about Pepperstone. Now, if anybody's got another brokerage that you want me to look at and kind of give you some more information about, I can go ahead and do that as well. Here's something else I'm not sure if we've talked about in the one-on-one yet, but swaps. Something else you might consider if you're doing a strategy where you might carry it over rollover time, which is the time where certain banks close and they have to they basically close your trade and reopen it, and that costs they charge a swap to do that. And you can see what the swaps are for different currencies. What they're telling you to do is download the platform, go to symbols, and go to properties. So I can show you that. I right-click on this. Actually, go into symbols. You can go to one of these currency pairs and hit properties, and you can see the swap. And it will change. These do change based on interest rates between the two currencies. So on the Australia CAD, for example, it's saying if I'm buying, if I'm long, if I'm a buyer, I'm going to get paid swap. I'm actually going to make money 6 points, which is really 6/10 of a pip, because I've got a 5 digits here, 5 digits on this currency. So it's really 6/10 of a pip. If I'm long, I'm going to get paid during rollover, which happens really in a couple hours. It's right when the New York market closes. And then you've got swap short. If I'm selling, I'm going to have to pay $9.30, or really 0.93 pips, almost a full pip, just to carry that trade over. So that's really not a huge deal unless you're really scalping and trading right around that time. You want to know things like that about your brokerage. So there's some brokerages that charge more for swaps. They might have like a markup on it, but usually you see the raw. It should usually be about the same across every brokerage. Okay, so let's see. Let me go back to this page. Someone says, have I heard of Pellucid FX? I have not heard of them. Let's take a look, see if I can find them. We'll see what they look like. One thing about this is there's really not, you can do a lot of the stuff I've shown you guys to kind of get an idea of some things about the brokerage, but you're really not going to know for sure until you open an account. And you can always start with a demo, and even then you can't really put a lot of faith in that. You have to really just find an account that they offer with this really small minimum. I found this website, Pellucid FX. I don't know if that's how you pronounce it, but these guys are saying you could start with $200. So you could definitely just open a $200 account and use Pipstat. See what the execution spread really is. See if you're really getting 0.4 pips. You can definitely try brokerages out like that. But let me tell you one thing you have to watch out for is even then, if you open a small account and you're trading a micro lot, they might have no problem filling you with a micro, because if they're giving you a great spread and not making anything off you, they don't really care, because they know if they treat you good, this is what a lot of brokerages like to do, is if they treat you really good on a small account and you start trading larger lot sizes, that they'll stick around. So when you start to trade larger lot sizes, keep using Pipstat and watch to see if those spreads change. If those execution spreads start to go up, then you'll know that they're really only going to do you good at a smaller balance, smaller lot sizes. And in that case, you might just want to execute a lot of small trades, a lot of one micro lot trades instead of one big trade. Hal says, would appreciate sharing of brokerages accepting U.S. I know of 4, FinFX, Forex FX, Traders Way, Pax FX. Any others? Forex FS. There used to be FX Open, of course. They stuck around for a while and eventually gave in and turned away U.S. clients. I haven't really been out shopping since after that I moved right to FinFX. I've pretty much been happy with them. And so I haven't even checked out these others too much that you've mentioned. So I don't really know of any others. What Dave is saying is this is one that does those. Pellucid FX does accept U.S. clients. So this one is one, Hal, you might want to check out then. If anybody else has a U.S. brokerage or another brokerage that they know about, maybe you can let us know. Something Hal's looking for, maybe others that you want to try out a couple different brokerages and see if you can't. Maybe there is something better out there than FinFX for U.S. clients. Hal says it only matters if leverage is greater than 50. So yeah, there might be some brokerages that accept U.S., but they still have restrictions. They might only, like Hal saying, might only give you 50 to 1 still, or might not allow you to hedge and first in, first out rules. So maybe, I don't know if you know on that, Dave, if they offer up to 400 to 1 or 200 to 1 for U.S. clients, or if it's restricted. Because there's definitely brokerages that still accept U.S. clients they just don't have this high of leverage for, even though they advertise it here as up to. That might be up to 400 to 1 for non-U.S. But anyways, but just looking at on the surface for this brokerage, what we could do is we could open up a demo, see if they're using instant execution, try them out there. If everything looks good, we could try a $200 account, trade the micro lot, watch the Pipstat, see if the execution spreads are still just as good, and then just keep an eye on it as we grow the account, as we add to it. And you can do that with pretty much any brokerage you trade with. Dave is saying he started it for U.S. clients because he was sick of the regulations. So it sounds like he probably does offer it for higher leverage for non-U.S. or for U.S. citizens. So I don't have a lot of information about them, but you can definitely, it's really a good idea to kind of diversify. Even I do have some funds with U.S. brokerages, with FXDD. We have a little account there, and FXCM. It's always good to have a few brokerages, even though you might prefer one over the others. It's always good to diversify it a little bit, just because you never know when one of them are going to disappear and say, we no longer accept U.S. citizens, and you have to take your money out. So it's best to just have other stuff going on. I see that's probably why Hal's out there looking for more than just FinFX. Okay. Well, let's see what else here. So the only thing, let's see, we got questions coming in here. I use Vantage in Australia. Only been with them less than a year and never withdraw any money yet. The service is pretty good so far. Any feedback on Vantage? I haven't heard of that one either. Let me bring that page up, see if we can look at them. Looks like it's probably Vantage FX. Looks like I have opened them or looked at them before. I have my link shows that I've clicked them before. Okay, so Vantage FX. Go up here to Products, Forex. They let you trade commodities. You can trade gold, silver, and oil. They even have some different indices. Saying their spreads are as low as a half a pip. Like I say, just don't. The key is just to, a lot of these guys can say that they have 0.1, 0.5 pip spreads, and they will look like they do. Like I say, it's all about what you really get executed at. And the only way really to tell for sure is with Pipstat, recording your trades as you take them when you open and close those trades. You can see if you go down here, these guys, like you said, they're in Australia, but you can see they say they're regulated by AFSL, so they've got regulations. So that's always good. It's good and bad. I mean, if you're in the U.S., it's not such a good thing with, with the whole leverage restrictions and some of the different rules. So they do say down here that their service offered by this company are not being offered to the U.S. So this is not for U.S. citizens or residents. Okay. And another thing, let me just tell you this. A lot of you are probably thinking, you look at Forex Peace Army, or you look at reviews. Let me tell you some things about that. Let me go to Forex Peace Army, is probably the most popular. How many of you, when you're wanting to know something about a brokerage, go to Forex Peace Army? You can type in a yes or no in the chat. Okay, we got some yeses and some nos coming in, so about the mix of it all. So let me show you this here. I'll give you my take on this site for using it to review anything really. Is you really can only take the reviews with a grain of salt, just because most of the time what you have on here is people reviewing their brokerage they're trading with. If they give a negative review, it's probably because they lost a bunch of money and blamed it on the brokerage. I see that a lot. You see a lot of things being blamed on brokerages that was really not the brokerage's fault. So if I go in here to Forex broker reviews, we can kind of get some ideas on that. You'll see that almost every brokerage has some negative reviews on it. I mean, I don't think there's going to be one single brokerage in here that everybody's saying something good about. I mean, there's some in here that are all 5 stars, but there's only a couple reviews. It's like these are probably new brokerages that it might be biased reviews. Who knows? Even this one here's ATC's got really good reviews, but it's really hard to really use this. I mean, I said I don't use this as a decision maker for whether I should go with this brokerage or not. If you skim through here, you'll always see somebody saying, I get terrible execution, or there's some problem, they couldn't get their money out, which is a lot of times it was the circumstances. It had nothing to do with the brokerage. Somebody saying I couldn't get out of a trade, it might have been in the middle of non-farm payroll for all we know. And they didn't understand that if there's high volatility like that, the market is going to be very difficult to trade. It doesn't matter who you're trading with. Let's see, here's somebody. Somebody's saying they think that there's somebody from ATC in here replying. But anyway, if you skim through these, I mean, let's just go look at FinFX even, or Pepperstone. We could look at either one of those. See, Pepperstone has only got 2.5 stars in here, and yet I have many traders in our group that say that they've had great success with them. Judy's been with us for a long time. I'm pretty sure she's, been with them for years and has had a lot of success. But here you got this guy Tommy in here, says he's been using them for 1.5 years. See what he's really complaining about. He says they're not only high slippage recently, he felt that they were targeting him, closed my stop loss by 10 pips away. Like I say, this is stuff that you see and you're thinking, oh wow, I don't want to go with them. But I guarantee if we were to go look at the situation where he's saying his stop was closed 40 pips away, It was probably news. It was probably a really fast move. The market spiked, and he's thinking the brokerage ran his stop for something like that. It doesn't really. That's not what's happening. There are some brokerages maybe that do that, but something like FinFX and Pepperstone, we know that a lot of traders are having success with them, and we haven't ever seen that, a legitimate manipulation like that. And even with slippage, I've got an execution spread up for. Let's just do this. Let me switch back over here to Pepperstone. The execution spread for FinFX on the euro pound during Asian market, where it's mostly really wide spreads, we've had a lot of trades go through here, and it's only 1.32 pips. Very tight spread, so we haven't seen any slippage problems. It's all about when that person was trading and that whole situation. So like I say, most people that are going to go to this site and post a review are probably they're going there because they're upset and they're going to post something negative. You don't really very often see traders posting positive reviews, and when they do, they probably, really had something they extremely liked about the brokerage. So I would rather read those and see what they liked about it, what really took them to this site to say what good things were they really saying about them. Anyways, that's my take on these kind of review sites, because really, like I say, on anything you review, whether it's somebody's software, signals, everything, there's just always going to be a group of traders that don't fully understand things, and you'll see negative reviews that don't really truly reflect the brokerage or the system that you're looking at. So just like Kenny says, there will always be positive clients and negative clients no matter what the brokerage is, and that's the way it is. It's more important, I think, like I say, do a little due diligence through demo trading, and you could even bring the broker to me. I can look at it a little bit, or let you know if I've traded with them, or just go with kind of the recommendations with what we use, FinFX, Pepperstone. If you're worried, you're not sure, open up small accounts, trade them for yourself. And that's the best way to do it. And the one thing to be careful about is some of these brand new brokerages that come out. Just because if they don't have their stuff together, they can get shut down easily, and you might have a hard time getting your money out. That's why I really prefer to just stick with brokerages that have been around for a while and that I know I've had good success with. Well, I think we're going to probably go ahead and wrap things up. I'll maybe give you guys a few minutes. If you have some questions about what we've talked about, I can go ahead and answer those. You can see one thing you might take from here on this site is it says labels here. They just got they got it in here where you can come in and see what brokerages support MetaTrader. So that's something you could possibly use this for, or even you can see if one of these brokerages is just an IB, an introducing broker, or if they're really if they're actually getting their own liquidity providers. The idea usually is going to be you don't want an IB, because most of the time they're a middleman. They're making a little bit. However, if it's a broker that is if it's somebody referring you to a broker as an IB, that's usually not going to be bad, because they are giving you they're getting the money from the brokerage, and they're not charging you anything extra. The brokerage is paying the IB. So I guess that one's not always the case. That one just kind of depends. There are some that might be an IB and do a markup on the spread. You don't want that. Well, I don't really see any questions. We've kind of had questions come in along the way, so we'll probably wrap this one up. If you guys have any questions after the webinar, you can always shoot us an email, and we'll get those answered for you. Otherwise, like I said, things will be a little different next week. Keep an eye out for an email in the beginning of the week. I will be giving you like a little article topic that we'll be talking about. You guys can kind of get up to speed, and the idea there is to do some of your own little research and maybe even take some notes down on the topic, that you might have some questions about, and then when we have the webinar, we'll come in and answer those and get into some more detail and go over everything live in the webinar. Okay, so we're going to close this down. I hope everybody has a great weekend, and we'll see you next week.